Good morning, traders, and welcome back to a special edition of Market in the Morning. I'm your host, Kevin Dubrisky, and do we have a killer episode for you guys? Guys, today we have some of the biggest economic data that we get every month, and that's non-farm payroll and unemployment. These are our employment index data centers that really give us some insight into how the Fed should be cutting rates or possibly hiking rates, and where markets could go next. Now, as day traders, what really matters to us is that these events bring volatility. So guys, smash that like button if you're ready, because Market in the Morning starts right now. Oh man, did we have some cool animations today or what?
That was cool, huh? I was waiting for the entire 5 minutes. I just wanted to see the entire countdown. Good morning, Kevin.
Each second was like the last.
Exactly. How's it going?
Doing good, man. How are you? Happy Friday. Happy non-farm payroll. You
Happy
excited
Friday,
or what?
man. Sorry? Am I excited?
Yeah.
I'm excited. I'm a bit tired, but I'm excited.
Awesome, bro. Let's get it.
The non-farm payroll is acting as caffeine right now, so I'm waking up.
There you go.
We'll just jump right into it, man, because data is about to drop in 9 minutes. So let's see if we can speed run this analysis and get some trade ideas going. All right, so let's do it. So we have unemployment rate and non-farm payrolls. As you guys remember yesterday's episode, Kevin was mentioning that if you click the brain icon and you see something that says in focus, that this is the data event that you should be paying attention to, and really pay attention to the playbooks here, right? Now, if I turn on my low impact events over here, and then I go to private payrolls, that's not going to have any in focus, because the main in focus events are NFP and unemployment rate. All right. So because this brings focus to the labor market. And as you know, Fed's dual mandate is to keep low inflation levels and labor market healthy, right? They have a dual mandate. So if unemployment rate pops up higher than 4.3%, although that's within the range, that's still above prior. So markets are going to start pricing in rate cut bets. And what that means is anything above that reading will bring a bearish reading to the dollar. Right. So you can even see in an explanation down here, a higher rate weakens USD via dovish Fed bets. Lower than 4.3 strengthens USD on hawkish repricing. Right. So what this means for USD is if unemployment rate comes out higher, we will likely see dollar spike down, right? Keep it, but here's where it's interesting is because dollar currently, this is because dollar has had its safe haven bit with all geopolitical tensions going on in the world. More specifically, in the last week, we have seen dollar go from 97 to back to 99. Right. And it's causing us to push into this 100 range if we can maintain above here. Wow. Now, how do we get up to here? If we were to get, like, and we go back to market over here, how do we get a bullish dollar if we were to get lower reading, right? So when I go here, when I go to gold and we look at market over here, we're still bullish on gold, but it all depends on the focus on this report. So non-farm payrolls, let's talk about this. Over 130, because prior is, that's going to be taken as a massive surprise, especially because our maximum range is 125, guys, right? And we're expecting 59. So what that means for gold is that if we get data that's leaning towards dollar bulls, we're going to see gold push deeper into this range back to 5,000, right? And previous few times where we've seen gold massively correct and continue back, it's been where we've seen take out some lows, push back up, structure shifts, and then the following week we continue up. These are cycles. You have to keep in mind, we're not always going to be pushing in a continuous direction. Very few times do you get one-sided moves like this that are very clean, right? This is consolidation. This is consolidation. Large part of this was consolidation, clean movement towards the upside, entire few days of consolidation, right? So that's what we have to keep in mind is currently we're in a phase that the markets are setting up. So even if we don't get a position in on NFP, what we're going to do is we're going to be patient. And I'm telling you, if this week we get some sort of choppy ranges or we get plays that are happening later in the session after the noise and dust settles, then we know that next week will be a much more fruitful week and we'll get more volatility, we'll get more opportunities, and we'll be here with Kevin 3 times a week, Mark in the morning, and we'll be smashing it out because we also have CPI next week, right? And CPI is a banger. So there's always events happening in the market that bring this sort of one-sided volatility. And as day traders, all we got to do is let's just wait for those times, right? You don't want to get caught up in things like this, trying to buy after you see a massive move like here.
Yeah, no, absolutely. We don't buy highs, guys. We trade the range and we trade with the fundamentals.
Exactly. Like if you were to chase a buy up here because you saw this push up in Asian, given the fact that we have NFP and labor market data, that's why it's so important to know exactly what events are in focus and what the market is anticipating for. Because if everybody's waiting for the data, do you think a move like this will happen when there's still uncertainty? Not always, right? But what could, like, this is where it gets even deeper, and I can't wait to break this down later. We'll save this for another day, but let's just continue to other analysis. So gold, we're still holding bullish, and the tensions are still holding the most weight, right? Geopolitical risk is premium is still priced in, but it's still elevated. Any new tensions could instantly spike it. Oil supply disruptions have been threatened. Central bank accumulating reserves has continued for 2 years in a row, right? Yeah, my favorite is CPI, guys. Yeah, someone said my last favorite CPI. And thank you. It was a great animation. Yeah.
Great
So
animation. Orders being pulled. Yeah, guys. So markets, we got 4 minutes, 3 minutes now till news. So a lot of times we'll see whatever orders there are because it is pre-market be pulled off the book, right? Institutions, they don't want to get filled somewhere crazy. They know that non-farm payroll comes in. Markets don't react because a lot of buying hits at once. It reacts because of the data that comes out. So the volume comes in afterwards. Let that big spike come through, and then we play the fundamentals and we play the data as market presents.
yeah, exactly. So and that's what it comes in. It's not about how the number comes out. It's about
Right.
what the number means for monetary policy expectations as well. And this is what's also important, equally as important, as well as how the markets digest it. You don't want to guess how the markets are going to digest it. You want to pay attention. You want to understand the data report, and that's exactly how we're going to do it. We're going to wait for the data to come out. We're going to click through it, see what it means for the currency. We're going to go to the currency chart, in this case dollar, see how dollar is moving, and then we're going to check out gold. We're going to check out ES, and we're going to give full ideas about how markets are digesting this data report, right? And that is, in my opinion, the best way to approach it is that you don't stare at their chart, because what a lot of traders will do, they'll be on the 1 minute chart and then they'll just see what area it spikes at, right? Whatever direction it spikes at, and it'll try to chase that momentum. You don't want to do something like that without understanding what actually the data means, right? Sorry, one more thing. We also have retail sales this morning as well. So it's a kind of like a complete data set that we have, and we have consumer credit at 3 p.m. business inventories. So we're going to see how it all plays out relative to each other, right? And that's what's important, is that how does this data come out together? What does this mean for monetary policy together? And that's what traders kind of get confused at, because they see unemployment rate go up, they see non-farm payrolls go up. They're like, what does that mean? Is that bullish? Is that bearish? What's going on? You know, they're like, where's this volatility? Why are we still ranging?
Right.
It's like, sometimes we got to break things down for people, and then it's hard because fundamentals are extremely made hard on purpose. It's like, imagine you're 30 years old trying to learn a new language. It's much harder to learn that new language now, right? Because you have so much things going on. You're paying attention to price action. You have so many other things going on in your life. Now it's harder for you to understand, spend years learning fundamentals. So that's exactly what we thrive to do, is that build tools that can easily be broken down. And you can be like, oh, non-farm payrolls is coming out at this. That's what it means for the currency. It's like simple as that. Like, I can, if a monkey was to come here, they could be like, hey, I can take a trade. Right? That's the point.
That's
so
red.
It's red. Exactly. It's red. Okay, sell, right? And it's like, no, it goes deeper than that, Mr. Monkey.
10 seconds.
We got 9 seconds.
Oh man, guys, what do you think? Over, under? I would like to see. I
think unemployment rate stays the same, or might even go down.
Unemployment's going to go down. I think non-farm payroll goes up. Ooh, non-farm payroll.
Oh, unemployment went up. Unemployment went up to 4.4, right to the max. And non-farm payrolls took a shit.
Let's go.
Negative 92 is very bearish for the dollar, guys. And unemployment going up, prices in, more rate cut bets, which is also, this is one-sided volatility data here. Retail sales went up, okay? So that's putting pressure on the dollar. But the main in-focus events are the non-farm payroll. So if I look at dollar's pushing down, gold should be pushing up. Right? And this is one-sided data. If we take out these highs over here in the lower time frame, we can continue to then see push into this range of 5,200, right? What you want to be careful of is any, and I'm just drawing out these lower time frame zones just so we can kind of map out any ideas that can come up, okay? The fact that we've held this area for the past 3 sessions, since end of day yesterday, end of day today, gives me confidence that if we were to break above or maintain above even 51.25s, we would start to see gold inching up towards 5,200. And that's something that if we were to break above here and you get some sort of lower time frame confirms, you could take a trade like that. If another scenario is that, and this is what I'm trying to, exactly, that drop on ES. It's just I would wait for this confirmation because we are headed up into these lows, right? But ES has had money outflows from the start of the week, with the war premium still being priced in, right? You can see like all these highs just keep getting sold off. These are like dead cap bounces. We haven't been able to get back up to the highs. There's nothing supporting that, right? But with this data, with labor market taking a hit, unemployment rate also going up, pointing to a very bearish dollar, this increases dovish bets, right? So this increases dovish bets, and this could be a potential play for ES to even like push a bit deeper before we get some sort of intraday buyers jump in. So we have to, right now we're in the phase or we're watching how the markets are digesting this data, right?
It's definitely impacting the Fed rate cut. Already the Fed watch has moved up a whole 2%.
Do you want to share your screen, Kevin?
What's that?
Do you want to share your screen for a second?
100%. Guys, check this out. Now, not the biggest move, but it shows the impacts, right? So we were as low as 3%. Yesterday said 2%, but here we are now at 4.6%. Now, we're not expecting, it doesn't really matter what the results come of unemployment and non-farm payroll while Powell is still at the Fed chairman, right? Because we're waiting Kevin Warsh. Powell is pretty sturdy on staying with a hawkish tone. That means either no rate cuts or he's hiking cuts, right? So we're not hiking rates. So we're probably just going to hold rates. But we see once we hit, where was it? I think it's July. June and July is when we really start to see that increase. So even April went from 11% to 14%. June is now seeing 30 to 31. July, not the biggest of changes, really staying pretty still. But what we saw last time we had non-farm payroll on market in the morning is that the Fed watch tool took like 20 minutes to really update.
Yeah. I've seen they've become a bit less real time, right? Like they used to be very on top of it. So this is what I mean. We're getting that one-sided volatility, even as you can see, dollar is dumping as well, right? And let's go back to ES. ES is still kind of correcting here. We saw a rejection off of 6,800. So we'll continue to see how ES plays out. But the next level that I have for ES is 67.52. Going back to dollar is going to, I think, come up to these highs gold is going to come up to these highs. And if we're to break this, maintain the structure, you would get this sort of play happening later in the session, which is completely fine because sometimes it takes time for the markets to set up, right? Maybe we even go back down to this low, create a higher low down here, and then continue towards upside, which is all fine. But what we need to keep in mind is that we are getting that one-sided data for the labor market in this case, which is important for clean trade moves, right? Around news is that you would want to have clean conditions, one-sided conditions, and not have just mixed data, which like no one's a fan of mixed data. Everybody just wants clean, one-sided. So sorry to mention, average earnings went up as well for on the year over year above the maximum. But in my opinion, the focus still remains on this major set of data that just came out. Unemployment rate going right to the maximum, right? Most retail traders, all they see is the forecast. Yes, it went above 4.3, but not above the maximum, right? These institutional ranges. And then same with NFP. NFP took a big dive. It was below forecast, but it was also below the very minimum of minus 9,000. So that's what the markets took as a big dump. And that's why dollar right now is just selling off of 99.3. Yeah. And there's gold like inching higher, right? So we may even get like some sort of if we get any even retracement into this area, like a higher low or following this structure that we have with the break of these little local highs over here. And then gold would continue up to 5,200 later on in the session. Exactly. Give or take any pullbacks in this range. Keep that in mind, right? We can't predict where the pullback will happen. All we can do is wait for it and then just take advantage of it when it's there. You see a pullback happen, you see market structure holding, you're like, yes, dollar weakness is happening right now. I'm going to take advantage of this clear one-sided volatility.
Yep, absolutely. Yeah, guys, I just want to show you real quick. And if you do have trouble with understanding like how the economic data actually impacts the market, not only does market have the greatest economic calendar out there right over here, right? And it'll break everything down. You click the little brain icon. And first off, this negative, was it 92K? That missed by over 150,000 jobs. That is a fat miss. We talk about extremes. This is definitely blew out the minimum. Yeah, blew out the minimum by 10x. Minimum was negative 9K. It hit negative 92K. Now, again, you're a new trader. You're trying to learn the new language of fundamentals, the dashboard, or even the news feed. Right over here for the high impact, this is going to explain exactly what that report means and the results of the report. So right here, US February non-farm payrolls, negative 92,000 versus January's positive 126,000. Again, what's this mean? How does this impact the market? It tells you how it'll impact the ES, the NQ, the dollar, the VIX, gold, and then it also gives you a market analysis. Non-farm payroll missed 92,000 versus the estimated positive 59,000, and prior revision signaling sharp labor market weakness amid Middle East conflict-driven oil spikes and inflation fears. There's a big word right there, inflation fears. We got to keep an eye out for that. Where do we go for fears, guys? Safe havens. The bearish data boosts Fed rate cut odds, weakening USD, supporting bonds and risk assets like stocks. Now, be careful with this right here. Supporting bonds and risk assets, usually bonds will move higher when risk assets go lower. So we do want to be a little careful on this type of sort of trajectory with the market. Though geopolitical risks cap gains, future softer data may prompt earlier cuts, but oil volatility tempers optimism.
Exactly. So because there's so much, there's also the optimism being taken away from the war, and then the data pointing towards earlier rate cuts, like markets pricing in a higher probability of rate cuts. That's where we have to really watch how the market digests the data, right? How the market is looking, give or take any pullbacks, see if there's any plays going to happen, or what will this just be a day of just mixed movements, right?
Yep, exactly. Got to be careful, guys. Look at this chart right here. This is the ES on the 30-minute time frame. Even just zooming out as far back as we can here on the 30. Just the past, what is this now? 21 days, almost 3 weeks of price action, all within this range. So at this point, we're at the bottom of this range. The question becomes, did the data that just came out, and as we saw in this report, it may support risk assets like stocks. Is this the low of the range? And a lot of traders are looking to short it because of non-farm payroll, right? Whereas we have the advantage using a tool like Market to say, hey, listen, non-farm payroll came out worse than expected. So did unemployment. That increases the chance of a rate cut this year. That actually brings a little bit of optimism. But if we didn't use Market, we wouldn't have known that the oil volatility is having issues, causing issues on that optimism. So be very careful on that. Even if you're not a trader and don't. Yeah, exactly. Great point. ISO says, even if you're not a trader, you're an adult and should be up to date on NFP, CPI, and interest rates. Absolutely. Unemployment, everything. All of these are very important. Even if you're not a trader, just understand where's our economy standing at right now if you're a US resident, right? Or if you're in the UK, they also have their own reports too. Around the world, there are reports. Japan, Canada. Be aware of them, whether you're a day trader, swing trader, or not.
That's a great point, because a lot of people also have like investments in retirement funds, and you want to have some sort of control over those, right? You don't want to just give it all off to whatever company is managing your 401k, or you know what I mean? Like, you want to have control over it. You want to know what's happening when it's time for you to like take profits on some of your gains and roll some money around in different sectors. So it's definitely a good idea, is that even if you're not a trader, that majority of the people are just passive investors, right? Who just take money out of their paycheck, put it into their investment account, and just let it grow for long term. So it's a great reminder.
Yeah. I'd keep an eye. We had some really great selling pressure coming on the S&P off of that non-farm payroll. Some volume coming into the downside as well. So it is showing some good continuation. I know we mentioned that we would look for trade setups during the live stream. So if I was looking for anything myself, a possible breakdown here with the volume could give us a nice little continuation trade to the next area of support we have on the ES at 67.47. So there's a possible short for you guys if you're interested. And again, that's with that non-farm payroll giving us a little bit of weakness there. Because of supports bonds, it should have a little bit of strength to the downside on ES and stocks. There we go, getting some movement. This would be a 2.5 to 1. Just looking for shorts where we're at, stop near the midpoint of the previous candle, and just to see if we could find momentum, right? We saw the last few candles, we found selling pressure towards the bottom. We have our fundamentals also. ES day trading slightly bearish. What's supporting this? Qatar fully shuts gas liquefaction Wednesday. Saudi Arabia. We just have economic tensions like everywhere right now.
Yeah, it truly is everywhere, happening all over the world.
Yep.
Tension in economies, tension geopolitically,
Yep.
tension. It's just a chaotic world. What it's been to start 2026. Seems like every month there's some new crisis that's happening.
Yeah.
When do you think aliens are coming? Is it happening summer or before end of year?
That's going to depend how bad Trump's trying to stop us from having the midterm elections.
Midterm election, right? He's like, guys, there's the aliens. They've come. We got to stay inside.
That's great. I'd be a little careful. So, right, ES is downside target, slightly bearish here on the market AI analysis. And again, that pressure, that oil warning, all of this, you might think like, oh, what's oil have to do with the stock market? It's still a commodity. It's still an asset that people invest in. And whenever there's any type of uncertainty in any type of market, we're going to feel that impact, right? Uncertainty hits the masses.
Yeah, exactly. Uncertainty hits the masses. And its markets are right now like hypersensitive. And this is why a lot of people's like setups will start failing around these events, or when headlines come out, or when something massive happens. Yeah, exactly. Like war is just a tax profit. Like that's it. It's just a tax loophole. Like you're just funneling money from tax to the military industrial complex. But anyways, so a lot of traders, their setups will fail on news or in these markets because of how hypersensitive markets are, right? And what I want you guys to do is I want you to go to marketedge.ai/webinar. We are doing an exclusive webinar exactly for this same event. And this is because this is purely an educational webinar. We'll teach you how to actually make sure your setup continues to win during news events or during geopolitical events, because that's where the secret sauce is in the markets. When there's a lot of volatility, it's because something is happening, and you want to know what's driving these moves, right? Across like what has driven gold's upside this entire time, or this way, right? We want to know what's happening, and that's exactly what we're going to do. Is if your setups are failing, this is an amazing event that's going to break down exactly how to trade geopolitics, how to trade news events, how to trade data releases. So secure your spot over here. The exclusive webinar we're doing in 15 days. And it's going to be very, very cool, man.
Yep. Awesome. Guys, check out the short on ES. Finally starting to break down out of that area.
It's almost at pushing down to the target.
Yeah, about halfway there. Hit 67.59, looking for 67.46, pulling back a little bit right
46?
Yeah, looking for 46 on my end. I got that on the hourly time frame. We could take a look to see. Yeah, it
46.
Was Tuesday's low.
Mm-hmm.
Tuesday's low range. And again, using supply and demand, I like to use it as a bit of an areas to find like, hey, this is our range in the market right now, right? We short supply, we long demand. Okay, we broke lower. Did we break lower with any fundamental news? Yeah, we just broke lower with non-farm payroll. Perfect. We're trading that short from this zone as now resistance to target the next zone as our next support area. Same thing. If we open up, markets sell off even deeper, then this area that I was looking for support becomes resistance too. We're looking to see the breakdown, retest, and continuation. Using my own technical levels with the right market fundamentals will always keep you on the right side of the market.
Yes, sir. That's important. It's you take your analysis, look at markets, see what's going on, look at the chart. You're like, okay, I have a plan. I'm going to execute for it. I'm going to look at my technicals. I'm going to map out the trade ideas. And now I know exactly what's happening. I do have a level that's 67.50. So I'm going to watch, but I do agree with your 40s. It could 100% push down into 40s, even back to the lows at like 67.30s.
Yeah, absolutely. And it's really going to depend too, right? The current market structure we've been seeing on the S&P has been a little funky. We've been seeing breaks a
Exactly.
previous day low and then we'd like reverse back higher, break
Yeah.
previous day high, reverse back lower.
Yeah.
So,
And honestly, that's like what we should expect in a range like this. Like it's
yeah,
just and also just geopolitically, like Kevin's been saying, there's just so much that's been going on. The entire world's under stress. So investors aren't going to feel comfortable pooling billions of dollars into US equities and continuing to do that when
right.
all this is happening. So we reach 50s, right? And we'll watch this 1 minute price action as well. Kevin, if you want to just share your screen, feel free since you have the trade idea open.
Yeah, let's get it. Let's get it, guys. Look at that. Look at that. We're moving. Moving it and grooving it. This is 16 points in profit from that original entry point we were looking at. Good momentum to the downside. This is not us. You always have to look at the market too, guys, from two perspectives. If you were in a trade, where would your stop loss be? Whether you were long right now or short right now, where would your
Right.
stop loss be? If you're not in a trade, what are you waiting for, right? Have predetermined levels, have your predetermined trade plan. Use, again, market every morning to just make sure, did we have any news come out? Did we have any headlines? Did anybody bomb anybody? What can be going on? Guys, look at this, man. We're hitting, there's that 6750, that NOAB level he mentioned.
Yeah.
That would be TP1. Looks pretty close towards that 46, still finding.
Yeah, I think we could get a quick push into there. Could happen. Could happen.
Not
Quick
bad, not
push into
bad.
there, maybe even 30s. Yeah, let's just see how it plays out. Even if it bounce here, but we fail to push higher, we could easily head back down, because market just moves in waves. But that was a good TP1, good entry that Kevin called out. That was easily over 30, almost 30 points. Fantastic, fantastic work.
Yes, sir. Yes, sir.
And good exit too, because you want to make sure that when you want to make sure you remain objective to
Right.
price, right? It's although we have a TP2 of like 40s, if that doesn't hit, we want to make sure we secured some things.
Exactly. That's why also, guys, if you're getting into trading, don't, especially futures wise, right? You don't want to go right away into minis where you're like one ES contract is $50 a point. And if it moves 3 points against me, I'm
Yeah,
screwed. Like, no way, guys. That's crazy. Take some micros. You trade 5 micros. Guess what? You could take 3 off when you see we're going into some strength and let the last 2 run. You could let the last 2 run with the stop at break even, however you want to manage it, so that you're at least locking in gains. Markets are they can do whatever they want, right? That's why with fundamentals, we're just getting the better idea, the better analysis, and the more clearer picture than a retail trader who doesn't have a good tool like market, who doesn't have an understanding of fundamentals. They're going to miss out. They're going to see this move down here, try to short the lows and get stopped out on the wick, and then markets are going to move in their favor.
yeah, exactly, exactly. Beautifully said.
Good volume down here. Sellers accepting price at lower points. Would probably like to see this trade pan out in the next maybe 5 to 10 minutes.
Yeah, I'm liking what gold's doing right now as well.
Yeah, let's take a look at gold. Pull up your chart. Let's get
Yeah,
it.
sure. As we were mentioning, like give or take some pullbacks in this range, it looks like lower time frame is looking to push exactly how we talked about into this area. So for scalpers, what this means is that since we got that one-sided data on dollar and just give or take some dollar pullback, since dollar does have its bid, this might get faded out. But gold, what that points towards on gold is bullish pressure. So if we start maintaining like higher lows in lower time frame, that could set up a nice place for us to head back into these highs. And then later on in the session, potentially break these buys for us to get those plays towards the upside,
Yep.
right? On the downside of this is that this could extend into here, collect more buy orders for later in the session, and then you see buyers jump in.
Yep, absolutely. I like this message, man. We were talking about risk management before. Yep, I used to blow so many accounts. This is the longest I've gone without blowing accounts because I'm not risking too much. That is perfect, man. I always tell people trading isn't just buying and selling and being right. It's a few things, right? We gotta know what's really driving markets, fundamentals. We have to know how much are we risking per trade. When you take a trade, you have to almost imagine you lost that trade already. And if you can't imagine that and you're like, no, if I lose this trade, my account's gone, then I got some news for you. You might be a little too heavy in size there.
Yeah.
Boom, TP hit. Let's go ES.
Let's go. 40s hit, 47,
Boom.
43.
I'll do what's that Julian
Yeah.
Massarelli guy, right? I'll start dancing and
Yeah,
stuff.
yeah. I think that's what you have to do. Yeah, that guy's hilarious.
Yeah. Yep. 930 may bring more volatility. Exactly. I'd be careful, man. What I would want to see really is these sellers step in, stay pretty strong for this pre-market, and we'll see where we're at during the New York Open.
Yeah.
If we're
So I just want to go over some headlines we got on market.
yeah, let's get it.
So we just got some headlines in the past few minutes from Trump, from Fed's Daily. Daily said that right now inflation targets it's a balance of risk calculation. Hope last year's rate cuts would put a floor under job market, but this report has my attention. So weak job attention, right? We have more worried labor market is weaker than we have seen. The wage growth is not a sign of frontness. And then Trump also came in the middle of it. There will be no deal with Iran except unconditional surrender, guys.
Oh,
that's insane. You know, Trump on Iran, there will be no deal with Iran. Okay, so that's just a repeated headline. You can see here Trump on Iran as well. After that, and selection of a great and acceptable leaders.
No. You know, that's important. That's important too. The headlines that come out after an event like non-farm payroll and unemployment, it could literally reverse the whole move we just had.
Exactly. It could literally reverse the entire play. So where do we just go on it? Yeah. Right over here. And as well as Trump said, US allies and partners will work to bring Iran back from brink of destruction, boost economy. You know what that means? That's like talking about, like, there it is, stall a central bank. let's take their gold reserves. This is full war. These guys are going to.
Yo, is oil at $86 right now?
That's also crazy. Let's check that out. Yeah.
Oh my God. Oil
87.5.
Wow.
It just shattered through yesterday's range.
This is insane. Oil, talk about a nice trending market. Last year, gold was the place to be. Like, gold was just every day trending nicely, other than like once a week. Oil so far giving us that move. Last year, oil was garbage, man. I don't know if any of you trade oil, but since Trump announced the whole tariff thing, you trade oil, Noab?
Yeah, no, I don't, but I watch oil, and it was just, I know what you're talking about.
It was awful, bro. I traded it. I used to trade it like
just
I loved it.
Yeah, just ranging into the smallest ranges,
Yeah. Oil used to give beautiful trades, because what's great with oil is because it's so low on its ADR, it's $86.70. When it was ranging between it was like 70 and 80, right? So you'd be able to take some trades and be like, okay, here's a 15-cent stop loss and a 70-cent target, right? So in these little dollar increments, we're able to get these massive risks or rewards.
Yeah.
Trump comes out last year and is like, we're going to tariff Canada and Mexico. That was the first and biggest red flag, because a lot of the energy we get from Canada, Mexico as well. So it's like, it caused oil to just stay stagnant. It went nowhere fast. It did absolutely nothing. Now we're finally getting some nice price action. We bombed Iran over here. This was Friday. We are up on oil over 30% in a matter of a week.
Days. Yeah, in a matter of days.
Yeah.
Even gold doesn't do that movement.
Yep. Yeah, seriously. That's
gold has done that movement like once, and then we had a massive correction like that. This is where gold did that movement up here, 25%. And then we had a massive downside the next day. But oil is just, and that's something we want to watch out for too, right? If these geopolitical risks somehow get de-escalated, and you're going to see that outflow and correction as well on oil, right?
Yeah.
And if we look at it on a scale of anything that goes up fast, will also come down equally as fast as well.
Yep, exactly. Guys, Iso in the YouTube chat makes a great point about oil. Oil is not an appreciating asset. It does not appreciate in value like indices or gold. It's supposed to stay stable for the average consumer. That's absolutely right. Just like natural gas, heating energy, these are all supposed to be stable enough so that it's sort of predictable even, right? Are we at the top of the range? Are we at the bottom of the range? When we see volatility like this, we want to be extra careful because a lot of times in an asset like oil, it's not going to last long. And if it does, right, if it does, then we're probably not looking too good, right? There's an issue behind that. Why?
Yeah. So gold, I just want to go over gold.
Yeah.
I gotta bring back the arrow. So we did not get the clean plays above this range, but that doesn't mean they can't happen, right? We want to make sure that we're trying to take the more optimal setup, which in this case would have been if we broke these highs, then we could inch up to 5,200 for the remainder of the session, given dollar volatility, right? In this case, we didn't get that continuation above those highs, so we're not able to take that play. If gold was to go towards the downside, we could easily see gold come down to here before buyers even jump in or try to jump into place, just because of the current structure we're currently seeing with the war premium being priced in on gold currently at the moment, right? So we'll continue to monitor it, but Kevin's trade played out even deeper into right to the tip of 38.
Yeah, that was a nice trade right there. It was very clean, solid entry, just a nice momentum trade. Trading
right to these lows.
Right, bro, perfect.
Amazing.
That's what you guys get with market, man. Make sure you run that like button up. We're going to do another three-peat next week because we have CPI on Wednesday.
Yep, we do have CPI. Not in a position to think we should hike.
Oh, man. Yeah, I wouldn't think we're going to switch to hiking. That would be wild.
Unless we got like inflation sustaining above high amounts, like then of course it paves the way for that. But yeah, we're not going to.
Yeah. I do like the area that gold is pulling back to.
Back into, right? This is the same lows from yesterday. So we're going to monitor this as well. I'm just going to hide these.
Exactly. Because also something too to mention, like we were talking about while we were at those highs, the reason we don't chase those highs is this reason exactly.
This exact reason.
You would have been stopped out. We came back to the range. You would have wanted to re-enter here. This is a better place to enter now.
Same with this, right? Like you saw this push happen in Asian session yesterday. And then from this price point, it just got faded out overnight. Basically, the same thing happened. We saw a push into here. And that's what we were talking about, that if we were to see that place above these highs where the previous sellers jumped in, then we could easily get those buy-side plays, right? Or we'll see a pullback into this daily range. This is where it gets a bit messy, but can nevertheless still pave way for clean price movements if we now start seeing, like, let's say we get a bounce, something like this, maintaining, and then slowly we chug back towards the upside.
Yeah, that's a clean
you want this sort of confirmation of us maintaining above this level. That makes sense, right, Kevin?
Absolutely, 100%. And something else to keep an eye on, guys, while the hourly candle wraps up right here, it's going to be 9 o'clock. Check those other time frames. How's the 30-minute? How's the 15? How's the hourly? Are they setting up with any type of confluence to say, hey, listen, this is just a pullback. We're going to keep going. Yeah. Or are we going to break lower?
Yeah. And if we break lower, like the next buy area I would like to see is like even if we were to break below these lows or see how we react as an intraday like double bottom here.
Yeah.
Or push a bit deeper into like 49.50s. I think those would be very good buy areas as well.
Yeah. Always a solid spot.
Yeah.
Solid spot below, again, key psychological level 5,000, right? A lot of people, we always want to know where's the most fear and where's the most pain in the markets. Well, if somebody was buying anywhere above 5,000, especially in a retail mindset, they're buying above 5,000. They're most likely psychologically stopping out below 5,000, right?
Yeah.
It's going to force a lot of volume, and a lot of times those are the better places to actually get in.
Yeah,
so exactly. I'm going to look for what I would like to see on gold. I'm going to show you real quick.
Yeah, let's see it.
So gold right here, this top chart, we saw that we've been creating some higher lows. This is what we showed you guys yesterday during Thursday's market in the morning, that even if we pulled back to this zone, we're still not breaking that low. So at this point, what I would like to see is one of two things. Can we hold support and hold that previous day low for bulls to continue higher? So I'd want to stay bullish if we stay above, but I'd also want to see, can we, since we're so close to it, pivot off of that previous day low? Again, psychologically speaking, a lot of traders either stop out of their longs at previous day low or jump into a breakdown trade at previous day's low.
Yeah.
whereas we know gold has more bullish fundamentals, and we're just at the bottom of a range we've seen on this higher time frame.
Yeah, yeah. So now, like we're seeing this sort of rejection. If we get like a double bottom or these lower highs being printing, that would give us confirmations to
Yeah.
continue towards the upside. And then, of course, your secondary set of trade ideas would be if once we break above these highs, like these intraday highs that we printed in Asian session yesterday, then you get that continuation to the next logical area, which ends up being, of course, there's some noise here, but it ends up being like 5,200.
Yeah. Yeah, no, pretty solid though. Great zones, great levels, and great trade setups here, guys, on Market in the Morning today. Absolutely killer.
Sorry, this is supposed to be at 75. Yeah. So there's that rejection as well. We're getting that play up. If we see a pullback, it makes sense for price to then start continuing and chugging towards the upside.
Yep. Yo, this looks solid, man. This looks solid. I'm definitely interested to see how the markets want to open at 9:30 ES and NQ, and see how we want to react off that market open.
Off that low, yeah.
Yeah, right? Like,
Actually, off that low, if we open somewhere here, I would love to see that reaction.
Yeah, me too. Have like retail jump in short right off market open just for markets to rally against them.
Rally against them.
Yeah. Top them out and then continue lower.
Yeah, I agree. Classic market mechanics.
Exactly. Guys, I think Nalab, you have anything to leave us off on?
No, I think that's awesome, guys. Check out the webinar we're doing. This is a lot of people, and this is a pain point we hear nonstop. People are like, my setup does not work in these markets. People are like, gold is broken, NQ is broken, ES is broken. Guys, it's not broken. You're missing a key element, and we're gonna break it down. Full educational webinar on how you can take all these events that really drive these massive swing plays towards the upside or downside, massive plays, and really take advantage and make 10 times what the profit you would make without trading without them, right? Because you don't want to trade blind. You want to trade with full confidence. You want to trade with full knowledge. And if you're a trader, it's your responsibility to know exactly what's going on at all times. Be that you use news feeds, in the economic calendar, what's happening in the bias of your trading instrument. So let's have a great weekend. Sign up for the webinar. And of course, hope you have a great week.
Absolutely. Take care, everybody.
This
was Market in the Morning, and we'll see you guys next week for Tuesday, Wednesday, and Thursday. Wednesday will be special edition. What's that?
That's a three-peat.
Yes, sir. All right, everybody. Have a great day. Take care. Happy trading, and make sure you manage your trades correctly, guys. Don't not overtrade, and we will see you on the next episode. Peace.